ForexDayBreak podcast.
Good morning and welcome to episode 103. Today we are going to see only EUR/USD. We are going to dig deep into the structure, see what is this structure telling us, what can we expect next, and we have also a trade here. So let's get going. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Okay, so EUR/USD, the correction, the minus wave 4 correction has made its way higher and is getting more and more complex as the correction forms. So today we are going to analyze this pair thoroughly and see what can we expect on this pair from the coming days and weeks. So this 4-hour chart, I'm going to first zoom a little in and see this more in detail, what the recent price action is. So yesterday my analysis was that we have finished some sort of triangle correction and have now started the next impulsive decline, and now it is evident that this was not the case. And if we take a look, let's move on to the 30-minute chart. So here we can see the decline, the previous quite strong decline is in a clear 3 waves. We can draw it here. So this move down here is in 3 waves. And this is a strong signal that we are still forming the minus wave 4 correction and can expect more upside in order to complete this whole structure. So we have a trade in place. It is buy stop order. So buy stop 1088, stop loss 1085, take profit 1095. So that is the only trade we have today. And this is the only pair we are going to analyze today. A little bit different episode today. So more upside is expected. And I have used the Fibonacci expansion tool. You can see maybe the faint gray lines here. Let's zoom a little bit further out. So this is 1-hour chart. So you can see the Fibonacci expansion tool is taken from the previous low, which is at 107.1 approximately, and first drawn to the peak of 109.68, and then taken the next decline all the way down to 108. So this tool measures the relationship of the, let's draw it here actually so it's more clear. So this tool measures the relationship of this wave and compares it to this wave, which is now forming. So here we can see the 61.8% level around 109.6, and if we take this a little higher, we can see the 100% line. So 100% expansion would be around 110.6, and these are our 2 targets for the trade. My take profit is right around the 61.8% level, which is quite conservative if we take into account that we have already almost touched that level. So right here, the recent high is very near of the 61.8% level. So we can possibly expect this to reach near 100% Fibonacci expansion level. So near 110.6. Also note that this red label here, 110.865, is the low of the minus wave 1, which cannot be broken. This level is absolute limit for this correction to reach. So the 100% line is quite close to that level. So maybe we are not going to see a move closer to this 100% line, but maybe can expect a move to stop somewhere between the 100% line and 61.8% line. Alright, let's go back to the 4-hour chart and zoom out so we can see the whole larger structure, which is quite complex. This has taken quite a long time to form, and the whole structure started from the 117, 130 level. And if we draw the whole structure here, first we can see from the 170, 130 high, a quite strong 5-way structure, an impulsive move, all the way down to this 110, 865 level, which is this red line and the label right here. So this was the first clear signal that we have started the next phase in this trend. This long downtrend has been going on for almost 2 years now, but this was the first clear sign, the 5-way structure from 117 to 110, 865, that we have started the next impulsive larger leg down. So first 5-way structure from 117 to 110, and then a large ABC structure for wave 2 all the way up to 114.94, and then a 5-wave structure for wave 3 with an ending diagonal at the 5th wave position all the way down to 105.2, and this is usually the case that the wave 3 is strongest and takes prices quite fast to the direction of the trend. So this is also the case here. So 105.2 was the low of the 3rd wave, and then we have the start of the corrective wave 4, and first this ECB release triggered 460 pip move to the upside, which forms a 3-wave structure as wave W, now another 3-wave structure as wave X. So now we can expect a 3-wave structure as wave Y, somewhere between the 100% and 61.8% Fibonacci expansion levels, in my opinion, because the 110.865 level cannot be violated. It is at the low of the first wave, and waves 4 and 1 cannot overlap in Elliott wave principle unless there's a leading diagonal in this case, or a diagonal triangle pattern, and like we see in the 5th wave of the 3rd wave, which goes from 108.3 to 105.2. So let's draw it here. So this structure here is an ending diagonal triangle. So the 110.865 level cannot be violated, and I'm thinking that we are going to get a move towards 110.4, 110.5, around those levels, and then the 5th wave of minute degree can start and take the prices to new low, maybe midterm low or even long-term low. So 105.2 is the midterm low and 104.6 is the long-term low. So those levels, I'm thinking, are going to become the next targets when the minute wave 5 begins. But now we have a trade that is expecting a move to the upside towards 110. Our take profit is at 109.5, so quite conservative, and it is near to 61.8% Fibonacci expansion level. So this Fibonacci expansion tool is very useful if you are analyzing your charts with Elliott wave principle. You can get very accurate targets, very good support and resistance levels with this tool. I strongly propose you use it, learn to use it properly, use it well, and you will get the most out of this tool. So Elliott wave principle is very strongly related to Fibonacci levels, Fibonacci relationships between the waves. So larger waves can be strongly correlated to smaller waves, with Fibonacci relationships, and also waves between corrections are usually related based on Fibonacci relationship. So 61.8%, 38.2. I think most of you probably know these usual levels, so I'm not going to go deeper into that, but usually the Fibonacci levels that are used or the way Fibonacci is applied into analysis is the retracement. So the retracement of the correction relating to the impulsive wave. But this is quite limited way to use the Fibonacci levels. The Fibonacci expansion tool gives more to your toolkit when you're analyzing, so you can project future moves. Also, you can anticipate possible ending points, support resistance points for impulsive waves. So it is very useful tool. Okay, so this is my full analysis of the recent couple of months of EUR/USD. In my opinion, this is on a large scale quite straightforward structure to analyze in Elliott wave principle perspective. So we have quite clear signs of impulsive moves to the downside and corrective moves to the upside. And now we are nearing the end of the minute wave 4 correction. We have clear levels that cannot be violated. We have clear targets that we can expect these moves to stop or reverse. So I'm quite confident that we are going to see something in the lines what I have now drawn in the chart. So a move towards 110.4 perhaps at the highest, and then a reversal and the next impulsive wave down and towards 105.2. Okay, that's all for today. Subscribe in YouTube to get these videos, and I will see you next week. Bye bye.
ForexDayBreak.com.